Hello, trading has closed on the 4th of June 2025. As always, we'll start with our disclaimer, go over our calls, and then make our predictions for tomorrow. It's my trading plan for June 5, 2025. Remember, it's just a plan at this point. I can change it. I can be wrong, and any trade one makes should be made at one's own risk. Looking for a gap and a prompt move outside the day's range. We got that. We had a target 59.8136. We got that. That was resistance, support. Also call for the pattern with the early low, which is this. Tends to be a rally, a midday drop, and then another rally. All that's played out. What we didn't get was a rally into the close. Now, this is just a review of what we said. At the gap, prompt move outside the day's range, pattern with the early low. We said that if it's a weekday, and if you don't close near the high, it's a weekday, it should lead to more weakness. Now, time doesn't run out until tomorrow's open, and the jobs report comes out before the open, and I don't know what that's going to be. If we gap up here after the jobs report, it's the normal pattern, and things are still fine if you're a bull. But if we can't do that, if we don't gap over this, this is a negative pattern because it didn't close near the high, and that should lead to lower prices. It doesn't necessarily lead to a lower close, but I'd be pretty shocked if we trade down, if we didn't also close down. I've been shocked before. During the day, MEJT said this rally was a false move, so price would drop back into the range, and they already have. Today was bar 12 of 13 of the DeMark sequential sell signal. Now we're still in the ambit of bar 13 of the DeMark combo sell. Bar 13 of the sequential doesn't have to print at all. It doesn't have to go to completion. If it goes to completion, it doesn't have to be any higher than number 12. In fact, the earlier in the count you hit the highest high, the more negative the pattern if we do print at bar 13. So there's no requirement we go any higher than this, and this is another in a long list of candidates for a possible top. We have a number of trend lines we should look at. We have this red trend line. It's a significant one because it surrounds this low. Ignore this and take these 2 points. It's this low. We just can't break over it. What we can do is continually test this blue support trend line. And the more often you test the line, the greater the chance you're going to break through it. We now have a new important line that's in solid magenta color. We connect this high to these highs, to these lows, to this high, and you get today's high. When you get a trend line like this, either you gap over the line or the line wins. So if you're a bull, you want to gap over this line, which in essence means you have to gap over today's high to keep the rally going. And if we trade over this line without gapping over it, that rally shouldn't stick. So that's pretty strong resistance right where we stop. Now I'd still like this count to work. It's just too pretty not to work. And in order to say this is an expanded flat in wave box C, you still have to find some way to count this, and no matter what happens, you can still get a good count without fudging anything. Well, it's legitimate to count the end of this wave as ending either here or here. I have been counting it ending here, but look what happens if you count it ending here. We have an A, we have a B, we now have a new ABC. If that's A, and you count B as ending here, C is equal to A. And if you take if you take in this wave C bracket, and you make that 100%, A is right at the 61.8. I mean, you just can't get better than this. You've got great fibs. Now again, we've had all kinds of great fib counts that work before. Doesn't mean something else won't work, but we now have a pattern where we've stopped that resistance from the trend line. We've had a rejection of this breakout to new highs, hitting new recovery highs and closing under multiple prior highs. You really have to gap up to keep this thing going, or else the market's going to drop, and it could be a major drop. And whether or not we get that gap, we're not going to know till tomorrow. Well, Thursday's pattern has the early low. It doesn't tell us if we open higher or lower, though. The jobless report comes out before they open tomorrow. It can affect the market in ways I can't predict with accuracy. Let's remember that. We could have a great response to the report and just fly off the charts. I don't know. That being said, the failure of today's normally bullish pattern to close near the high, if it's maintained at the open, is bearish. It should lead to lower prices even if we don't close lower. The equity-only put-call ratio gave a sell signal yesterday. It isn't a pinpoint indicator, but it's not bad. There's wave balance at today's high. We have 12 bars of countdown for it to mark sell, sequential sell. There's no requirement for R13 to print, nor for it to trade any higher than we stand now. The rejection of the move to a new recovery high is further evidence we're near a significant top. Bulls need to gap over the solid magenta line, essentially over today's high, to keep the rally intact. I'm just not certain they can pull that off, and even if they do, it shouldn't be long before we top out for the short term if we haven't already topped out today, and unless we gap up, I think we've topped out today. I think this is really it, but again, I'm not putting money on it until I see what the open is. One thing, I was busy all day, I didn't have time to analyze it. You really have to gap up here if you're a bull. You can't do that. We should be dropping, and this could take us back down about 300 handles, which was my target for the next decline before the rally resumes, because I think we're going to go to new all-time highs later in the year. I haven't forgotten about 59.16.20. Doesn't have to print tomorrow, but it wouldn't surprise me if it did. If, in capital letters, if we don't gap up and just kill my whole idea. So it's the pattern with the early low. If you're a bull, I would cross my fingers. And that's today's call.